Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
And we'll look at that aspect of adding candles to whatever Western indicators you're looking at now. This is a very important concept. Candles should be used for final confirmation. Whether you decide to pull the trigger or not, you could have 20 Western indicators lined up saying pull the trigger, go long or go short, but the final confirmation made by the most successful traders is with a candlestick signal. Okay, you don't get a candlestick signal, you don't do the trade, or you do it more lightly. If you get a candlestick signal, you do it more aggressively. Of course, with the proper use of stops. I'm not going to have time to go over trade management, but very, very important. There's always a price that says you're wrong. One of the great ways, safest ways, and best ways to really maintain a long-term trading stance and save your trading capital is really the use of stops. But in our more detailed educational resources, I'll briefly mention those at the end of the session. I have a whole section on candles, and we have candles in my favorite Western technicals, and candles in trade management like risk-reward analysis, and setting trailing stops and setting time stops and so forth. But let's get back to this. So an empty or white real body means the close is higher than the open. A black real body means the close is under the open. And some of your charting packages might be green instead of a white or empty real body, or a red instead of a black real body. And the lines above, and these are doji to your right over here. But before I get to the doji, let me go over here. The lines above and below the real body are called the shadows. So the top of the upper shadow is the high of the session. The bottom of the lower shadow is the low of the session. So the reason I made reference to Western technicals is because the candlestick line is made of the same data points, open, low, close, and high, as a bar chart. So whatever, for those few of you who are still using bar charts, because once somebody has a taste of the proper use of candlesticks, they never, ever go back to a bar chart. But for those who are using bar charts, you're going to find that you could use all your classic bar charting indicators, Western indicators, moving averages, trend lines, oscillators, Fibonacci retracements on a candlestick chart. I do that all the time. And then, as I mentioned before, I use candles as my final confirmation. And we'll look at this aspect of East and West candles and Western indicators in a little bit. The lines to your right are called doji, and doji are sessions where the opening and closing are the same. And doji are quite effective at calling potential top reversals. And let me show you how simple it is to understand the power of candles. There's a lot of, I mentioned before, a lot of bad information out there, and a lot of analysts or a lot of educators try to scare people saying candles are really complicated and so forth. That's nonsense. Candles are really simple. And the reason for that, and the reason the smartest traders use candlesticks, is because you could use, I made this reference before, reason one, you can use all your Western indicators as you would if this was a bar chart. So you're giving up absolutely nothing. Okay, but the real power and potency of candles is it gives you twice the information as a bar chart. First, it shows you the price. Secondly, and this is the key component of why candles are going to be a potentially helpful way to really improve profits and, equally important, decrease market risk, is they show you the force of the move or the lack of the force behind the move. So let me show you a case in point here. Okay. Now, it's easy to see who is in control here. Tall white real body, the market opened here and closed here. Who's in charge? Obviously the bulls. Here are the bears are in charge. Now, these small real bodies, and again, we're going to be here 45 minutes or so, maybe an hour or so. So we don't have time to get into, all the 15 or so major candlestick signals. These are called spinning top small real bodies. As these small real bodies show us is a tug of war between the bulls and the bears. So what this is showing us is the prior trend could be running out of steam. The candles are very powerful in giving you potential reversal signals in 1, 2, or 3 sessions. All right? and that traditionally is much, much faster than you can get with traditional Western indicators. So one of the key aspects of successful trading, okay, is getting back to or going to these rules of money management. Now, obviously, Warren Buffett, as far as I know, if you hear me sipping once in a while, I'm just drinking some hot tea to keep my throat lubricated. I don't think Warren Buffett may be involved in the Forex market. He might be, for all I know. But what he says is universally true, even though he's talking about equities. Rule 1, don't lose money. Rule 2, don't forget Rule 1. So successful trading, first and foremost, and Steve talks, Steve and I talk a lot. We meet at trade shows, and we run into each other at, any trade-related shows and elsewhere. And, I know how much he values, protecting your trading capital, as do I. So here, for example, and it doesn't matter which currency, which pair or cross this is, or it doesn't matter the time frame. This could be a 5-minute, a daily. It's irrelevant. So here, every time the dollar vis-a-vis the Canadian, again, it doesn't matter. It could be the euro versus the U.S. Doesn't matter. Every time it got to around 125, the doji, a doji where the opening and closing are the same or nearly the same, the Japanese would say the market is tired. So here, as shown in the title of the slide, reading the market's message, we could see very easily that the market is losing its steam every time it gets near 125. That's a strong cautionary signal, all right? On this first doji, I'd probably use it to take some profits. One of the great things about candles, you could use them not only to enter a position, but to exit. And there's some nuances on when to use candles to enter and exit. And, for example, here's the doji. I don't see a confirming resistance area, so I'd use it probably to take some profits. This doji over here is confirming a resistance area set up back here on the left, so I'd be a little bit more aggressive and actually sell short on that doji with a stop above the recent high. This is a great trade because my minimum target would be the recent low down here. And some of you may use fib retracements, but I use recent highs and lows. And, for those who are trading Forex and ISE, one of the great things about Forex is just as easy to sell short as it is to go long. That's not true in the equity market. Equity, if you're selling short, you need high margin requirements and just a lot stricter rules. So that's just another reason to be trading Forex. Obviously, there's a lot of major advantages, and those who trade Forex, are familiar with all of them. So here we're looking at just even something as basic as a doji showing us the market's losing momentum. And here's one of the books, a portion of a book I've had translated. Spent big bucks on having lots of books translated. And you don't have to worry about reading the first part about the Western technicals on a little longer term scale. But the Japanese analysis is on a more micro scale, and the part I underlined is the most important. On the psychological analysis of the investor, and I would add the phrase or trader, becomes an important factor. And that's what candles do so well. They gauge the psychological component or the psychology of the market at the time the candlestick line is formed. So, for example, here we have a hammer. The market's in the downtrend. Now, look at these long lower shadows. The hammer could have a black or white real body. Psychologically, what's going on with the market? These long lower shadows are showing us the market's rejecting lower levels. This is a potentially bullish signal. If the market's solid, it really should not close under the low of the hammer. Many candlestick signals, not all of them, but many of them can be used as support or resistance. So the lower the hammer can be used as a support area. What that means is if it closes under it, if you're long, you're wrong.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.